What's going on, guys? My name is Richard, and welcome back to another stock market outlook video. As always, I'll talk through my trades over this past week, which is pretty eventful. Then we'll also talk about the price action of the major indexes, the leading stocks in the market. We'll also talk about how my previous watches performed, and we had some great performances on here. And we'll also round out the video by talking about sentiment from a few different sources, and also cover the IBD Big Picture article, and also the GMI signal from wishwellball.com. And then based off all these market indicators, we'll determine what the current trend of the market is. And then based off that trend, you can kind of decide for yourself how aggressive or defensive you want to be in the market next week. And if you enjoy my analysis throughout this video, please go ahead and leave a like down below. It really does help me out and my channel. And of course, subscribe if you're new to the channel and looking forward to more videos just like this one every single week. But diving right in, let's talk about my trades over this past week. And in general, what I've been trying to do is practice progressive exposure, meaning that if trades are working and the prices are going up after I buy them, I slowly either buy more of that position or buy a few other starter positions in different high quality stocks. So talking through my trades, let's start with Tesla. And I started my position last week on this big upside reversal back through the 50-day moving average. So I already had a half position going into this week. And I did add as it had a green dot indicator on Tuesday, but then I also took those shares off on this day because I didn't like the price action on higher volume falling, although it is holding the 21 EMA. So as for Tesla, I'm being very flexible. I think this is one of the leaders of the leaders actually in the stock market. So if it kind of breaks out from this short-term resistance level at this level right here at the high, which was 448.88, or above these highs right here at 461, I will be adding back these shares. But overall, it was my worst performing stock on Friday, and I don't like the overall action, so I felt more comfortable going back to a half position. Next up, we've got XP, and I bought it initially on this day right here, the 28th, on this breakout through the short-term resistance area. And I added to it on the breakout attempt on Thursday. It was acting very, very well. And overall, I got shaken out of these ads on this quick reversal down on Friday. But so far, I still have a good half position in this stock. And hopefully, it can continue to move up and takes out these highs and eventually breaks out of this potential high tight flag. And overall, with these faster moving positions, I usually have a smaller than usual position size because there is extra volatility associated with these names. So that's XP, and on to the next, we've got NEO, and I bought this coming out of the downward trendline break and also a green dot on Tuesday, and I added to it also on this Friday as it was holding up reasonably well. It did decrease somewhat towards the end of the day, but so far it's holding the low of this past Wednesday, which I take as a very positive sign, and is holding up very well relative to the market. And you can see that the RS line has been increasing over the past few months, and it's a very strong stock and just broke out of its kind of IPO consolidation phase. So hopefully this has a long runway ahead of it, and I'll be looking forward to its price action next week. So next up, we've got Beyond Meat, and I bought this as it broke through this pivot right here at 162.50 and also on the green dot setup. So I went in pretty heavy. I actually went in heavier than a usual position because I really saw huge volume coming in, and you can see that this volume is greater than anything over the past few weeks, going back really to these bars right here. And when I see a stock really moving up strongly on, I think 7,000 volume buzz that morning, I may go in a little bit heavier, and we'll take it off later as it moves up, and I'll go back to a position size I'm more comfortable with. And that's kind of what I did. I held it for these 3 days as it was really trying to break out, and I added as it broke out of this little cup shape here, but I did take off some shares on Friday just because I didn't like the action, although it was on lower volume. But overall, this type of breakout on huge volume, that is not your Aunt Sally buying. That is institutions piling into the stock. So always take notice of huge volume up bars like this. I think XP as well had a pretty large bar on this day. And you can see the reversal day, which was down initially, was also on higher volume. So always take a note of these high volume bars. They are signs of institutions buying shares. So that's Beyond Meat. And moving on, we've got Fastly. And I bought this initially on this day right here as it broke out above 95. And I also did the same thing on this day. And so far, this is a normal size position. And hopefully we can break out above 100 and hold it. I really would like to see that. But it broke through the downward trend line that I was watching here. And you can see I've got some alerts set right before 100, looking to add more shares if it really breaks out and pulls something similar to DDOG. So that is Fastly. And next up, we've got CrowdStrike. And I bought this on this short-term stochastic cross, this teal dot here. And I went into a full position because I have a lot of conviction in this name. And so far, it's acting well. And hopefully, it can continue to move up and challenge these previous all-time highs. And next up, we've got Zoom, which I bought initially on, let's see, this day right here. It was showing a teal dot earlier in the day, but it did decrease later on in the day. But overall, it's acting well, holding up excellently versus the market. And that relative strength really stood out on Friday when it was actually up and green at the start of the day when a lot of stocks were down 4%. So even though it closed down on the day, I really like the signs of RS on that Friday. And hopefully this can continue to move up and challenge these previous all-time highs. And next up, we've got LVGO, which I own from this move up from the 50-day moving average. And I added to it on this Friday as it had a nice upside reversal and took out the low of the previous day. And overall, it's acting really well. Hopefully we can finally get that move up and break out as it's been going sideways for a few weeks now. And next up, we've got SQ. And I bought this as it broke out through the short-term resistance levels at about 159, and it's acting very, very well. I've got a 2/3 position in here, and you can see that the RS line is also breaking out into all-time highs, which is always a good sign, really confirming the strength of this move. And lastly, I did put on a half position of SQQQ near the close on Friday because we did take out the 50-day moving average on the QQQ. So this is just a short-term hedge, hopefully designed to reduce volatility within my portfolio. And I'll be quick to take this off if we have a strong rally day next week, but I do want to see us stay above that 50-day moving average next week. And this is a good way to kind of transition over to a day-by-day analysis on the QQQ, which is the Nasdaq 100 ETF. So overall, on Monday, we had some really nice action, actually. We gapped up, faded all the way below the 50-day moving average, but then we were strong enough to rally above it and actually finish up on the day, which really shows that the bulls stepped in and supported the market. And then on Tuesday, where a lot of growth stocks were acting very well, and this is where most of my buys were this week, we had a nice kind of consolidation day where we had a very tight range. And I think this was an excellent day to really absorb the move here and set us up for a strong rest of the week. And on Wednesday, we had a potential strong move up through this resistance level at 280.45, but we couldn't hold it and we got knocked back down for a not so great closing range on this day. But overall, we still were up on the day. And then on Thursday, you can see we gapped up and had a nice upside reversal. And overall, things were still acting well. But there was the unfortunate news of the president getting COVID on this day. So we had a huge gap down and we attempted to rally all the way up to the previous close, but we couldn't hold it, which really shows that people are pretty bearish at this point. And you can see it was on higher volume on this index. So overall, looking at this last bar, the expectation is we go sideways or lower. And I really would like to see last week, or next week rather, that we take back the 21 EMA and also the 50 SMA. And going over to the weekly chart, you can see that we were up 1.01% on the week with a weekly closing range of 23.6% and a daily closing range on Friday of only 9.9%. So from this weekly bar, and you can see we're below that key 10-week moving average, we are either going sideways or most likely lower. So that is the QQQ. And moving on, let's talk about the SPY, the S&P 500 index. And overall, you can see that we were up 1.55% on the week. And we had a weekly closing range of 35.1%. And we had a daily closing range on Friday of 45.5%. So overall, this index slightly outperformed last week versus the QQQ. But overall, we're still below the 10-week moving average. And from this bar, the expectation is we go sideways or lower. And lastly, taking a look at the other major index I like to look at, the IWM, the Russell 2000. You can see we had a very strong performance this week, up 4.4% with a weekly closing range of 89.8% and a daily closing range of 84.1%. So this index really outperformed the other two. And overall, from this bar, the expectation is we go sideways or higher. You can see we retook that key 10-week moving average last week. Moving on to the other major indexes, let's first take a look at the DIA, the Dow Jones ETF. And overall, we were up 1.88% with a weekly closing range of 49.7% and a daily closing range of 65.2%. So this also slightly outperformed the SPY and the QQQ. And we actually had a follow-through day on the Dow Jones. And if we go over to MarketSmith, let's take a look at that. You can see that on this day, this Wednesday, we had a gain of 1.2%. And we had volume greater than the previous day. So this counts as a fall through day. And if you want more information about what a fall through day is and kind of what it signifies, go ahead and check out my video that I made on that subject. That should be popping up right here. So that is the Dow Jones, overall a strong performance. And the expectation from this weekly bar is we go sideways or higher. And next up, we've got the FFTY, the Innovator IBD 50 ETF. And this shows that growth stocks overall did decently last week. We were up 2.09% with a weekly closing range of 42.1% and a daily closing range of 25% on Friday. And the expectation from this bar is we go sideways or higher. And next up, we've got XLF, the financials. And overall, they rallied strongly this past week. You can see they're up 3.45% with a weekly closing range of 82.9% and a daily closing range of 80.3%. And next, taking a look at GLD, the gold ETF. You can see we were slightly up on the week, up 2.06% with a weekly closing range of 78.2% and a daily closing range of 33.6%. So the expectation from this bar is we go sideways or higher, although we are below that key 10-week moving average. And lastly, taking a look at the VIX, the volatility index, you can see we're up 4.74% with a weekly closing range of 54.6% and a daily closing range of 23.6%. And hopefully this index decreases over the coming weeks and challenges these lows because that's a better environment for trend following. So those are the major ETFs. And just quickly going back over the QQQ, we are in a potential stage 1, stage 2 scenario with the price below the 10-week, but still above a rising 30-week. And on the Dow Jones, we are also in a potential stage 1, stage 2, where we're just below that 10-week, but we are above a now rising 30-week moving average. You can see that these bars right here are getting taken out, so it's starting to flatten and move up. And also taking a look at the IWM, stage 1, stage 2, and finally the SPY, stage 1, stage 2. So those are the major ETFs, and now let's move on to the potential true market leaders. So sorting by the weekly change, you can see that this week we were led by SCDG and EMPH, both solar stocks, and they both had very strong moves off their 50-day moving averages, which is why I actually chose TAN for one of my picks this week. And overall, you can see a big jump in price, and it broke out into new all-time highs, and also the RS line as well broke out into new all-time highs, a very bullish signal. So SCDG, very strong, ENPH, very similar, and moving on, we've got DKNG, which also continued its move up, and you can see the RS line is also going into new all-time highs. And next up, we've got DDOG, which had a huge breakout on the highest volume ever on Wednesday, which is a huge sign of institutional accumulation. And you can see the RS line is right at all-time highs once again, and it's holding up very well versus the market on Thursday and Friday. Moving on, we've got Peloton, which also continued its strong move up with the price breaking out into all-time highs along with the RS line. Fiverr continues to outperform. Apps is right at all-time highs once again and is potentially above its green line. Let me go ahead and check that once again. Yep, it broke out on this Tuesday above its prior all-time high, which is this green line right here. That if we go to a monthly chart, this is the highest it had ever traded, and then had a huge long-term base here, and is just now poking its head up above that line right here. So moving on, we've got Roku, which also had a strong performance. You can see that it broke out on this day right here, then got knocked down by the overall market, but is making its way into all-time highs once again, with the RS line confirming that move as well. SQ is right near all-time highs, and the RS line is moving up into all-time highs, which is a bullish signal. Beyond Meat, we already talked about. Fastly, we already talked about. AMD is right above its 50-day moving average, and you can see that's acting as support right at that area, although the RS line is still basing. So hopefully we can get a move up in this line, and then potentially a breakout from the short cup pattern right here. CrowdStrike, we already covered. TDOC, along with LVGO, is acting decently, although I would like to see kind of tighter action here, and eventually a breakout into new all-time highs above 253. NVIDIA is also acting well. You can see it had a move up last week, but did get knocked down on Friday, down 4.06%. LVGO, we already covered. HCMP is basing right near all-time highs. The RS line pretty much flat. Tesla, we already talked about. SE is right near the short-term pivot of 162. Zoom is acting well. And finally, we've got WKHS, which is not acting well at all, and is a bit volatile these past few weeks. So that's a brief run through of the potential true market leaders. And now let's move on to my weekly watch list and universe list. So overall, just checking out my universe list, sorting by the weekly change. We had some very strong performances: LMPX, SEDG, ENPH, Regi, Sale, DQ, TTD. So when I post those lists on Twitter, I suggest you don't just focus on my focus list. Those are my top kind of 10, 15 ideas. But overall, I would say that any of the stocks I list in my universe list is potentially actionable the coming week. So LMPX, which is actually my kind of bonus pick last week, fared very well, up 32% from the open to the close last week, and has an up-down volume ratio of 4.3, which really screams that institutions are accumulating this stock. Look at these huge up volume bars here at the bottom of this base. So definitely keep an eye on this one and wait for a potential base to form, potentially as it finds resistance up here. But anyway, just sorting by my focus list, you can see that overall we had 4 stocks over 10% gains, and XP was very close, up 9.43%. And actually, we didn't have a red stock this week, which is pretty rare. So overall, a very good performance from my watch list. Going through, we already talked about DKNG, which continued to break out into all-time highs. CELH had a nice green dot on this Tuesday and a nice follow-on day on Wednesday, but it had a very erratic day due to some reports questioning the financial validity of kind of its reported earnings and sales. So this likely would have stopped you out here, but overall it found support at the 50-day and had a nice strong day on Friday, and it could potentially challenge these short-term pivots at 24.20. And next up, we've got NEO, which we already discussed. Then we had TAN, which had a very strong performance, breaking out of the short-term consolidation here, and is moving up nicely with the RS line confirming as well. And overall, just look at how solar has been outperforming pretty much this entire year since the March bottom. When I see an ETF like this, I really want to take a look at the stocks within that ETF and find the potential leaders of that space. And SEDG and PH are definitely among the leaders. You've also got Run, VSLR, which are just breaking out to all-time highs every single day. So if those stocks rest up and provide a buying opportunity, I'll be looking to get into these leaders in that leading group. So that is TAN. And next up, we've got XP, which we already covered. SQ, we also covered. MVCR broke out last week, just barely. And you can see it had a nice upside reversal on Friday as well. So this is potentially still actionable. Beyond Meat broke out. I already talked about it. And Fastly and CrowdStrike, we also already covered. So overall, once again, a very good performance from my watch list. And make sure you guys tune in later today when I'll be posting my next focus list. So that covers how these stocks are performing. And moving on to sentiment, let's first take a look at my Twitter surveys. And we did have a drop this week, down from 53.6% to now 49.1%. But this is still somewhat elevated. And looking at the NAAIM exposure index, you can see that this could be somewhat bullish if this is a contrarian indicator. And overall, you can see hedge funds are still pretty underexposed at this time. And next up, we've got the put-call ratio. And overall, it's still kind of trending just kind of sideways. And it's nowhere near the kind of 1.15 level that you would hope to see at the turning point within a correction. And lastly, take a look at the Bulls versus Bears index. You can see it was moving down. We saw a slight uptick last week. And overall, you can see this is still kind of nowhere near these reversals in the corrections in 2019. So moving on to the IBD Big Picture article, the headline is Dow Jones rallies off lows, but technology stocks take heat. LGI Homes tops new buy point. And overall, reading through the article, they talk about the weaker than expected September jobs reports, the news about Donald Trump, and also some stocks which were hurt on Friday: Adobe, AMD, Tesla, Nvidia, and also how Amazon, Apple, and Microsoft are now back below their 50-day moving averages, which is significant because they make up such a large weight of that index. Overall, they discuss how the Dow Jones is potentially leading at this point, which isn't a good sign for growth stock trading. And they also talk about the home builders here. You've got LGI Homes, LEN as well doing well. And you could play these stocks using the leverage ETF called NAIL. So that index kind of acts more like a stock similar to TAN. So go ahead and check that out if you're so inclined. But overall, their view is now the stock market is back in a confirmed uptrend because we had that falter day on the Dow Jones. And overall, their Friday's action is tech stocks fall hard, but small caps lead. So that is IBD's take on the market. And overall, the GMI signal at this time is still red. And you had a GMI score on Thursday of 3 out of 6. And overall, my take on the market is right now we're in a sideways choppy environment. So a step higher than correction for me because we had that falter day. And overall, the leading stocks are acting well, but still there's that risk of volatility. And we don't have a clear uptrend either in the QQQ, SPY, and those stocks still are struggling with their 50-day moving averages. So I hope you guys enjoyed this video. And if you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos.